We see a lot of clients that have both a personal liability component as well as the company. And a lot of directors are unaware that they do have, that it's not just the company. They think that the company has the debt and that if the company closed down, then their personal liability would go away. One of the solutions that you talked about that we specifically help with is a payment plan. So when the company enters into a payment plan, the other interesting thing about a director penalty notice is their parallel liabilities. So the company, I'm going to use round numbers, the company might have a $300,000 debt that turns into a DPN debt. So both the director and the company on their ATO portals and on their accounts have the same $300,000 debt. So if the company enters into a payment plan and starts to pay off that $300,000 and the debt reduces, then it automatically reduces on the director's account as well. So by putting the company into a payment plan, it stops any actual enforcement of the director penalty notice, and it just sort of sits a bit dormant. What's another solution when you're looking at the insolvency side of things? If a company's not viable. So if a company's not viable, there's not enough money coming in to cover these debts and they don't really see a future down the track. What's one of the solutions that you can help with in that regard?
You look, one of the hardest parts of being an insolvency practitioner is speaking to people who have started businesses that they're very passionate about.
Yeah.
But the unfortunate reality is the business isn't viable. And while you're continuing to trade, you're continuing to expose yourself personally to significant liabilities. So one of the conversations that we have to have about people is, if you're going to enter into some sort of workout arrangement through a formal insolvency appointment, a small business restructure or an administration, is this really a business that's worth saving? Or is it something that's just going to expose you to further liabilities, further risk, that possibly it's time to call it a day on the business and start looking at ways to limit your exposures? And that is hard. People have invested themselves in their businesses, and I feel for them. That's the real situation. Is that where you're going to put your time and energy every day? Is that how you want to make a living to support your family? Or is there a better place that you can be doing that if you take a more objective view of things? Because the risks of getting it wrong can be quite severe.
And I think that's the biggest difference. So where we come in is if it's a viable business, a payment plan, they just need breathing space and time. And where you come in is when it's no longer viable. Breathing space is not going to fix the problem. Another thing that we get asked all the time is, can you just make the debt go away? Can you just do a deal? Just tell the ATO that if they don't take my $100, then there's no money at all and everyone's going to lose their business, and just do a deal.
Have you got a magic wand there, Olga? Because
I do,
we could make a
actually.
lot of money.
I've got a magic one right here because I get asked that all the time. So I did get given a Harry Potter magic wand for Christmas last year to keep on my desk. But unfortunately, it doesn't actually get rid of the core debt. The ATO don't have any legislative power. There's no laws that allow them to get rid of that primary debt without an event of insolvency. But if there is a small business restructure or a VA, you have a slight magic wand and you can get rid of some of that debt depending on which way the company goes.
Absolutely. Look, small business restructures have become a really viable part of debt management for Australian businesses in the post-COVID environment, largely because the ATO extended an olive branch to the community and said this is an opportunity for everybody to get their tax debts under control and attempt to collect the now close to $100 billion of unpaid taxes, and try and get people's tax accounts back into the black, back to balance, so that they become responsible and on-time taxpayers. Now, if you can come to the tax office with a proposal that is in the best interests of creditors, that is a responsible way forward for your business to get some tax relief, whilst providing a return to the creditors, particularly the tax office. The tax office is interested, they are listening, and they will consider compromise arrangements through the small business restructuring process or through the administration process, and they are supporting that. It has become a bit tougher in recent times because the ATO has taken the view that they need to make sure that we are responsible taxpayers, that people aren't specifically incurring debts that they don't intend to pay, that they're not incentivizing people to create tax avoidance schemes. But that doesn't mean that they're not reasonably listening to businesses that are viable, that have thought about a responsible way forward, and giving them some tax relief through the small business restructuring process.
So we're seeing a big shift in exactly that with the ATO at the moment. Around a lot of work is coming to us from SBRs that have been put forward that have failed. One of the biggest things we're seeing is if there's a director loan or a Div 7A loan, the ATO won't grant the SBRs. And then if we go back to what we were talking about at the beginning with director penalty notices or director's personal liability, I think it's super important, which as you know and you do, when looking at an SBR and whether it's viable, is what the director's personal liability is. And if the personal liability is almost the same because of late lodgements, then often we will come in for a payment arrangement because a SBR is not really going to reduce the debt.
Look, that's really important, and I think that there's been a lot of sales and a lot of pitch to the community out there that's about signing jobs, not about affecting solutions,
Yes.
that have now resulted in people who thought they'd solved their problems by signing up to small business restructures, then finding that they still had a continuing problem with their personal liability.